my name is Jason Mercer, the Toronto Real Estate Board's Director of Market Analysis. While summer is not officially at an end, the passing from August into September is certainly a milestone every year in the real estate market when we move from the slower summer months into what is hopefully a pickup in activity in September and October. With this in mind, let's have a look at how the market fared last month. Greater Toronto Area Realtors reported 6,357 home sales through TREB's MLS system in August 2017. This result was down by 34.8% compared to August 2016. While the number of transactions was down for all major market segments, the extent of the year-over-year dips correlated with price point. Detached home sales were down the most compared to 2016 by 41.6%, whereas condominium apartment sales declined by a lesser annual rate of 28%. Consumer polling undertaken for TREB by Ipsos in May suggested that we were starting to see a shift in consumer preferences towards less expensive home types in response to the strong price growth experienced in 2016 and the first quarter of 2017. This is particularly in relation to detached homes and condominium apartments. The number of new listings entered into TREB's MLS system at 11,523 was down by 6.7% year over year and was at the lowest level for August since 2010. After an initial spike in listings following the announcement of the province's Fair Housing Plan, the number of new listings have moved back below last year's levels. It's important to remember that generally speaking, there is no economic catalyst like a recession prompting people to list their home for sale right now. So as many buyers have moved to the sidelines, new listings have also edged lower. Recent reports suggest that economic conditions remain strong in the GTA. Positive economic news, coupled with the slower pace of price growth we are now experiencing, could prompt an improvement in the demand for ownership housing, over and above the regular seasonal bump as we move through the fall. So we've talked about demand and supply indicators for August. Let's now turn to price. The average selling price for all home types combined was $732,292, up by 3% compared to August 2016. This growth was driven by the semi-detached, townhouse, and condominium apartment market segments that continue to experience high, single-digit, or even double-digit year-over-year average price increases. The MLS Home Price Index Composite Benchmark, which accounts for typical home types throughout TREB's market area, was up by 14.3% year-over-year in August. The fact that the MLS HPI growth outstripped average price growth points to fewer high-end home sales this year compared to last. The relationship between sales and listings in the marketplace today suggests a balanced market. If current conditions are sustained over the coming months, we would expect to see year-over-year price growth normalize slightly above the rate of inflation. However, if some would-be buyers move from the sidelines back into the marketplace, an acceleration in price growth could result if listings remain at current levels. What we see in the fall could give us a better sense as to which of these scenarios may unfold. With that, I thank you very much for your time and look forward to speaking with you again in a month's time.
Brought to you by GTA Realtors.